Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. Firstly, we would like to take this opportunity to wish you a very happy Diwali. Now in this video, we'll be talking about Edelweiss Diwali Stock Picks for the year 2018. Please watch this video to know more. Now the first stock on the list is Voltas Limited, which is available at Rs 523.35 and the face value for it is 1. The symbol for it is VOLTAS. Now Voltas is a Tata Group company and has three business verticals, which are Unitary Cooling Products or UCP, Trunky HVAC Services and Equipment Services business. In the UCP segment, Voltas is the market leader in room AC with 21% market share. Recent weakness in UCP business is transient in nature and long-term story of higher penetration of AC business remains intact. The Trunky HVAC business is for installing air conditioning solutions in large infra projects. EPC business has seen turnaround since the last 4 quarters from EBITDA loss to 6.5% EBITDA margin in FY18. According to management, incremental orders are in the range of 7 to 8% EBITDA margins, which will help in scaling up the profitability going ahead. Now Voltas' Equipment Services business provides spare parts to various global partners and is also a trigger for the company. The company has grown its PAT at 24% CAGR since the last 5 years, and over the next 3 years the growth would be in the range of 13% CAGR. At current market price, the stock is trading at 22 cross FY20 estimated earnings and looks to be attractive from a long-term perspective. Now the second stock on the list is HAL India Limited, which is available at Rs 365.95 and the face value for it is 1. The symbol for it is DABUR. Now HAL is one of the largest FMCG companies in India. It has two divisions, which are Consumer Care Division and Foods Division, and the company also boasts international operations. Consumer Care Division offers a wide range of products in hair care, oral care, health supplements, digestive and candies, baby and skin care products based on Ayurveda, over-the-counter products and branded, ethical and classic products. Now HAL's Food Division has products like fruit juices, cooking paste, sauces and items for institutional food purchases. Now the company generates 50% sales from rural market compared to the industry average of 35 to 40%. Company's PAT in the last 5 years has grown at a CAGR of 14%. Edelweiss believes that the company would grow at a CAGR of 17% over the next 3 years. The category in which HAL operates is expanding. Companies like Patanjali have been able to expand the market for honey from INR rupees 400 crores to 700 crores and toothpaste market from INR 6,000 crores to INR 9,000 crores, which is beneficial to HAL in the long run. Edelweiss expects volumes should improve from 3.5% on an average since third quarter of FY17 to 8% from first quarter of FY19 onwards. At the current market price, the stock is trading at 36 times the FY20 estimated earnings. Now looking at the 1 year chart, the company was an outperformer for the majority of the year. However, of late it has been correcting. The company has a debt to equity of 0.2070, whereas the return on equity is a very good number and stands at a figure of 0.2756. The promoter holding is also a strong factor at 67.88%. The company is also available at a relatively cheaper price to earnings ratio of 55.87 when compared with the industry PE of 64.50. Now the third stock on the list is HAL India Limited, which is available at Rs 647.45 and the face value for it is 1. The symbol for it is HAVELLS. Now incorporated in 1983, HAL is one of the largest and fastest growing manufacturers of electrical components and systems in India. It is the market leader in light duty power distribution products. Its offerings include electrical products like circuit protection equipment, both domestic and industrial switch gears, cables and wires, and consumer durables like fans, CFLs and lighting fixtures. Now HAL recently acquired the consumer segment of Lloyd Electricals, which would give it access to Lloyd's strong distribution network with 10,000 touch points along with leadership in room AC segment with around 12 to 14% market share. Now GST will also enable higher compliance and consolidation in the industry, which provides level playing field for players like HAL to compete with local unorganized players. Also, the company's strategy of premiumization of highly penetrated category is unique and sustainable. Now INR 15,000 crores under-penetrated unitary cooling market provides next leg of growth for the company post Lloyd acquisition. Company has grown its PAT at a CAGR of 13% since the last 5 years, and the next 3 years growth could be in the region of 22%. At current market price, the stock is trading at 34 times its estimated FY20 earnings. Now looking at the financials, the company is largely trading in line with the industry PE of 50.63, and the promoter holding is a decent number at 59.55%. Now the next stock on the list is Biocon Limited, which is available at Rs 629.35 and the face value for it is 5. The symbol for it is BIOCON. Now Biocon is largest biologics company in India and has 3 business verticals, which are contract manufacturing, contract research and branded domestic formulations. Now the company is a front runner in upcoming biosimilar opportunities globally. Company has filed for blockbuster biologics drug, example Humira, Lantus, Neulasta and Avastin, which are multi-billion-dollar opportunities, and these filings will take Biocon to next level within the next 4 to 5 years. US generics business will see significant pricing pressure due to channel consolidation, highest ever approval and reducing opportunity size. Hence these companies who are heavily dependent on US chemical based generics should be avoided and biosimilar based companies should be added to the portfolio, is what Edelweiss has to say. Now company has grown its PAT at 4.5% CAGR since the last 5 years, and the next 3 years growth CAGR would be a whopping 51%. This would largely be driven by biologics. At current market price, the stock is trading at 33 times its FY20 estimated earnings. Now looking at the financials, the company appears to be expensive at 53.80 PE compared with the industry PE of 29.83. The price to book ratio of 7.2910 is also on the high side. The 1-year chart indicates that this company has had a dream run over the last 1 year. However, over the last few weeks, it has been consolidating. The promoter holding is also a strong factor and stands at a figure of 60.67%. Now the next stock on the list is Sun Pharmaceutical Industries Limited, which is available at Rs 579.35 and the face value for it is 1. The symbol for it is SUNPHARMA. Now Sun Pharma is the largest pharmaceutical company in India with 30% of sales coming from domestic markets and remaining 70% from exports. In India, the company is ranked number 1 as per IMS sales rankings. In the US, it has a strong presence in complex generics and it's directing its R&D spending towards biosimilars and new product opportunities. During FY18, the company got adversely impacted by the significant price erosion witnessed in the US generic pharmaceutical market. Edelweiss thinks that this phenomenon was transient due to strong influx of generic competition led by rapid ANDA approvals by the US FDA. However, subsequent impact of further generic competition will not be as significant, with the company having adequate launch pipeline to fuel further growth. Post HAL resolution, there is an expectation that the business will move from $80 million per quarter to $120 million per quarter from second quarter of FY19 onward. Innovative pipeline, which includes Odomzo, Cesera, Tiltra and Ilia, will drive incremental growth, and there is an expectation of $400 million peak sales within the next 5 years, which will compensate price erosion in base generics business. The company will have 20,000 crore net cash at the end of FY19, which will be utilized for earning accretive acquisitions. At current market price, the stock is trading at a price to earnings ratio of 32 times its FY19 estimated earnings and 23 times its FY20 estimated earnings. Now, as is evident, the company is slightly more expensive when compared with the industry PE of 29.83. The price to book ratio of 3.5996 is also slightly expensive. The promoter holding is just above average at 54.38%, whereas the dividend yield is 0.35%. Now the final stock on the list is HDFC Bank Limited, which is available at Rs 1946.55 and the face value for it is 2. The symbol for it is HDFC BANK. Now HDFC Bank Limited is a holding company and offers a range of banking services covering commercial and investment banking on the wholesale side. Now this is India's largest private bank. The distribution network comprises of 4,787 branches and 12,635 ATMs spread across 2,691 cities and towns in India. Now HDFC Bank is consistently gaining market share in advances and deposits. Bank's market share in advances and deposits increased to 6.1% and 5.6% in FY18 from 2.3% and 2.6% in FY6 respectively. Now ROA for this company is expected to improve on back of the following factors. Number 1, cost income ratio is likely to come down as digitization plays a key role from clients acquisition to disbursement. Number 2, the credit cost for this company was elevated last year due to higher agri slippage, which is likely to remain moderate, leading to a comparatively lower credit cost in near term. Now, HDFC Bank consistently witnessed healthy profit growth even in challenging environment. The bank's net interest income and net profit growth was 26% and 28% respectively over the last 48 quarters on the back of 28% growth over loans and advances. Edelweiss has projected net revenue and net profit to grow at 20% and 26% respectively over FY18 to 20 on the back of 25% growth in loans and advances. Now, HDFC Bank may look to unlock value by selling stake in its subsidiaries HDB Financial Services and HDFC Securities. HDB for FY18 reported PAT of INR 9.5 billion and loan book of INR 436 billion. Now, HDFC Securities reported revenue for FY18 of INR 7.9 billion and PAT of INR 3.4 billion. Edelweiss believes that the bank may divest stake in its subsidiaries in the future to unlock value for the bank and strengthen its balance sheet. At current market price, the stock is trading at 3.2 times its FY20 adjusted book value with ROA and ROE of 2.1% and close to 18% respectively. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.